Hey everyone, welcome back to Corporate Decoder, the place where we decode the financials of the companies you interact with every day. Today we're diving into EXOZYMES Inc. and their latest Form 8K filing, which seems to be all about what happened at their shareholder meeting. Let's see if they're cooking up anything exciting or just going through the motions. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down these filings even further. Alright, so this is a report filed with the US Securities and Exchange Commission, or SEC for short. Companies like EXOZYMES have to file these reports to keep everyone informed about what's going on. This particular filing is an 8K, which is basically a report for current events that shareholders should know about. Think of this as a news alert for investors. It's for important stuff that happens between their bigger, more regular reports. The company we're looking at is EXOZYMES Inc. They're based in Nevada and their stock trades on the Nasdaq Capital Market under the ticker symbol EXOZY. Now this little checkbox tells us EXOZYMES is considered an emerging growth company. This means they get some flexibility with certain reporting rules, which is pretty common for newer or smaller companies that are still growing. The main reason for this filing is to tell us about what happened at their 2025 annual meeting of stockholders. It's like a report card on how their shareholder meeting went. So on July 25th, the shareholders got together to vote on a few key things. The first big item was electing new directors. They voted to put 6 people on the board of directors, and these folks will serve until the next annual meeting. Then they had an advisory vote on something called Say on Pay. This is where shareholders give their opinions, sort of like a thumbs up or thumbs down, on how much the company's top executives were paid. This was for the fiscal year 2026. Another advisory vote was about how often shareholders should get to vote on executive pay in the future. They basically asked shareholders if they preferred to vote on executive pay every year, every 2 years, or every 3 years. They also voted on approving the 2025 Performance Equity Plan. This sounds like a plan that gives stock or options to employees and executives based on the company's performance. It's a way to incentivize them to hit their goals. And finally, they voted to approve their outside auditors RBSM LL for the fiscal year ending December 31, 2025. It's important to have an independent auditor to make sure the company's financial reports are accurate and reliable. Now let's look at the numbers. As of June 9th, there were over 8.3 million shares of common stock eligible to vote. Out of those, almost 4.8 million shares, which is about 57% of the total, were represented at the meeting either by shareholders showing up in person or by sending in their votes ahead of time through a proxy. This is a decent turnout, showing that a good chunk of the shareholders are engaged. Here we see something called broker non-votes. This happens when a broker holds shares on behalf of clients but doesn't receive specific instructions on how to vote those shares for certain proposals. For most of the votes, there were about 500,000 of these, but not for the auditor approval. Let's dig into the vote counts. Proposal 1 was about electing the 6 directors. For Christopher A. Marlett, for example, there were over 4.2 million votes for him, and only about 22,000 withheld. It looks like the shareholders were happy with the director nominees. The numbers for the other 5 directors were very similar, with huge support for all of them. This indicates a strong endorsement of the current leadership and their proposed board. Proposal 2 was the Say on Pay vote. Shareholders overwhelmingly approved the compensation for the named executive officers. Out of the votes cast, over 4.2 million were for it, with only about 1,800 against it. This shows that, at least for now, shareholders feel the executive compensation is in line with performance or the company's overall health. Proposal 3 was about the frequency of the Say on Pay vote, and this is interesting. The vast majority, nearly 4.1 million votes, were for holding this advisory vote every 3 years. So the shareholders have clearly signaled they prefer to weigh in on executive pay less often. This means the company will now hold this advisory vote every 3 years. So the shareholders have clearly signaled they prefer to weigh in on executive pay less often. This means the company will now hold this advisory vote every 3 years. So the shareholders have clearly signaled they prefer to weigh in on executive pay less often. This means the company will now hold this advisory vote every 3 years. Proposal 4 was the approval of the 2025 Performance Equity Plan. Here too, the vote was strongly in favour, with over 4.1 million shares voting for it and less than 93,000 against ST. This plan is intended to align executive and employee interests with those of the shareholders, and the vote confirms that shareholders support this incentive structure. Finally, Proposal 5 was about ratifying their auditor RBSM LE. Almost all the votes cast were for ratification, with a tiny number against. This is a standard procedural vote and it passed with flying colours as expected. It shows confidence in the firm that is checking their books. So the big takeaway from this meeting is that the shareholders are generally on board with the company's leadership and their plans, especially when it comes to executive compensation, where they prefer a less frequent advisory vote. They also approved the incentive plan and the auditors. The report is signed on July 28, 2025 by Fahad Nawaz, who is the Chief Financial Officer. This is common practice as the CFO would be closely involved with the financial and voting aspects of the meeting. Looking at EXOZYMES from this filing, they seem to have had a smooth annual meeting with strong shareholder support for their board, executive compensation policies, and their performance-based incentive plan. The decision to move to a triennial advisory vote on executive pay is a clear directive from the shareholders, which the company will now follow. While this report doesn't give us detailed financial performance numbers like revenue or profit, it shows a company that is functioning well in terms of corporate governance and investor relations. The lack of significant opposition on any of the proposals suggests that management is communicating effectively with its shareholders and that the company's direction is broadly accepted. A key risk for any emerging growth company is maintaining shareholder confidence and demonstrating a clear path to profitability and growth. Based on this report, EXOZYMES appears to be successfully navigating the governance side of things. Alright, that's our breakdown of EXOZYMES Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Do you think the triennial vote on executive pay is a good idea? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out and tells us you want more of this content. And of course, subscribe so you don't miss our next deep dive. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching. See you next time.